Hi. I'm Giuseppe Incarnato, CEO and Chairman IGI Investimenti Group. Welcome to Private Equity Lesson 6466. Trends and Evolution of Exiting Activity in the Italian Market. According to the AIFI 2020 report, in the last 5 years, in Italy, the divestments number and amount divested has progressively decreased, as shown in the following table. In 2020, the divested amount, calculated at the purchase cost of the equity investments, reached €1.594 million, a decrease of 28% compared to the €2.216 million recorded the previous year. In terms of number, 81 disposals were recorded, also in this case a decrease compared to 2019, 132 exits, distributed over 67 companies. As regards to the breakdown of divestments into the types mentioned in the paragraph, the following two tables show the percentage distribution of the divested amount and the number of divestments by type in the years 2019 to 2020. In Europe, the sale to another private equity operator also remains the most widespread type of exit, albeit to a lesser extent than in Italy, 34% in 2019 and 35% in 2020. Also in Europe, in the second place, we find the trade sale, which in 2019 amounted to 29%, lower than the 33% recorded in Italy, while in 2020 it amounted to 25%, higher than the 15% recorded in Italy, which suffered a relevant decline between the 2 years. During the investment cycle, the prospect of exit cannot be neglected, in particular when the company must evaluate a transformational acquisition that could positively or negatively affect the success or the exit. Think of how profitable it is, for the purposes of a subsequent valorization, to have increased the scale of the company and its degree of internationalization through a build-up strategy and have placed it in a range of higher multiples. For the purpose of maximizing the capital gain inherent in the shareholding, the critical factors in the exit phase are essentially three: the choice of the time window to implement the divestment, which depends both on the performance of the company in the portfolio and on the conditions of the M&A and capital markets. Identification of the category of potential buyers, strategic and financial or public equity market. This choice will influence the adoption of the divestment process, which may result in an M&A or IPO path. The decision on the sales strategy to best enhance the outgoing asset. As already mentioned, exit planning should start early, with considerable thought being given to structuring and positioning the business to make it attractive to likely buyers, as well as networking and relationship development with these buyers. A lot of preparation should go into the robustness of the management plans, the detail of due diligence, and other reports. Efforts should be made to warp up the market by making potential buyers aware of the upcoming sale several months before the formal process starts. The exit thesis normally forms a key part of the investment approach for any investment contemplated by the private equity firm. GPs need to understand the exit potential of the underlying business to recognize any elements of the proposed investment strategy that may actually detract from value creation. When deciding whether to exit or keep the company in portfolio for a longer period, a private equity firm should consider several strategic factors. Most likely, a successful exit strategy balances the company's need for additional growth capital with the need to provide returns on capital to the fund's LPs. The possibility of obtaining a capital gain depends primarily on the performance of the company in the portfolio.